All right, so in the chat, real
I
quick.
kind of I kind of use both, mainly Thinkorswim, but kind of use both.
Thinkorswim.
Right. I'm not going to show interactive brokers, unfortunately, because I don't have that one. But I could help you on chat if you need to. I could use that.
Is this mainly how to enter? This webinar mainly going to be how to
Yeah.
enter trades?
Yeah, I'm going to go over how to enter them and things I'm going to look for the 5K challenge. That'll be slightly different strikes than what I'm going to be normally giving. Yeah, I can't show TradeStation either. There's so many different brokerages. So I'm just going to show either Thinkorswim or Tasty Trade. But the other brokerages are very similar in how to actually enter these. So we're getting quite a few Thinkorswims here. 1, 2, 3, 4. I'm going to go with Thinkorswim then. You got to give me like 10 minutes before the updates happen because Thinkorswim always takes forever to actually update. Like, how are they always updating the desktop? Like every minute, they're like, "Oh, I gotta update this." Like, they're not updating anything. I'm kidding. It's logging in. I'm battling a little bit of a allergy thing. I don't feel bad. It's just my voice is not 100% right now. All right, we're gonna go Thinkorswim. Let me share my screen. I gotta also log into Discord. I don't have time to do that yet. So in general, the main things we're going to be doing different in the 5K challenge will be a little bit higher strikes in the option trade positions. The 0 DTE positions are going to stay exactly the same. I don't want to go much higher delta on those because the VIX low, it's going to be really hard to play those. And also it's going to be a lot of stop outs, especially if you have higher delta, it could get really dangerous and have pretty big losses. So we're going to look at around the 0.06, 0.09 or so delta on the 0 DTEs. And then for the longer dated, we're going to look for slightly higher deltas than you're used to. But I'm going to show you different ways that you could still keep them pretty conservative and very typical to what we were doing before. Okay. So yeah, we're going to focus primarily on the longer dated trades. Here's the option trade channel. And for these, just some admin stuff here. I'm going to keep the alert the same way that it's written here. But then in the 5K challenge, if I was doing this one, I would just write 5K in the end of it. Okay. So some members here are lifetime for all type of strategies. If you have futures, strangles and all that, you're going to be seeing trades every day, just like you do now. But most of the trades will be the 5K trades. However, if we use up all the 5K funds and you're still waiting for a position to close, at that point, I'm going to still be giving alerts out. Those will be the safer 0.08 to 0.12 or so delta. It just won't say 5K on it. And then people that are not in, sorry, people that are only in 5K won't be seeing those. So I don't want to make sure you're using more than your 5K buying power. That's the whole goal of it. Okay. So again, if you see 5K there, it's part of the 5K challenge. If you don't see it, it's not. As for strikes, so let me show you how to enter in trades, and then I'm going to give you guys ideas to make them safer if you want to. So the Amazon trade was from 419. On Thinkorswim, you want to type ALZN. This is on computer. I left a video on how to do it on phone.
Okay.
So you're going to go to the 419 expiration. I'll get questions. Let me go over this first. So 419 expiration. The first number is 167.5. You're going to be selling that option. So you're going to go to the strike price column. Expiration date's good. 160, what was it? 167.5. On the right side of the screen are puts. We're going to go on the bid and click on the bid price. Then you're going to go 5 width away, go to the 162.5 strike price, go to the ask column, asks column, hold the control key down on your keyboard, and then click ask. When you do that, you get a vertical. Some of you guys are putting in different order entries to start. This way is the most efficient way I could think of. Click the bid of the first one, hold control, click the ask on the second. That's all you have to do to enter a spread. Does anyone have any questions on that? Like how to enter?
So Lance, quick question. So I don't, so any particular reason why you're not selecting the spread from the top as vertical? So it says spread single.
I'm so used to doing it this way is probably the right answer. You could do the different strategies, but then you have to change the strikes. And sometimes the default strike width is different, and then you're gonna have to re-click it anyway. It just seems like it's more work.
Okay.
That's why I just do it this way, because I'm already on the options screen. Just click, control click, done. That's why I do it that way. But yeah, you
So-
could do it on the strategy section, click vertical and then find it.
So yeah, and on your top left, right? So after option chain, filter off, there is a spread single. So instead
Right.
if you select vertical, I think that's what in the trade station, that's what I will be
Yeah.
doing. So
On TradeStation, can you make it a 5 width default? I don't know if there's like a default setting on it.
I don't know. I am just
So-
playing around with it.
You got the ordering right yesterday when you showed me it, so it's
Yeah.
very similar to what you just did. All right, now this one was around 0.1 delta, which is a relatively safe trade. 0.1 delta means there's only about a 10% chance that we're going to get down to that 167.5 price. So that means there's about a 90% chance it doesn't do that. However, the premium was only about $25. If you make $25 off, it would be $475 in buying power. For all your brokerages, it's a 5 width spread, but you're going to subtract the premium you collect on it. So 500 minus 25 is 475. In this particular trade, if it expired worthless, it would make 5.2% on your money in 21 days. And to me, I think that's a really good trade to make. You're getting a good return on your money. And I showed the reasons why I took the trade before. You could increase the strikes as well. And in the 5K challenge, we're gonna sometimes, I'm not gonna say every time, but sometimes gonna change the strikes to a little bit higher delta. As you'll see, you could take in more premium. So if I went up to the 170, really close to the 167.5, click the bid, control, click ask at 165, you can take in $41 on that trade. Suddenly, with 40 divided by 460, 500 minus 40, you're at 8.7% on that trade. So it is a higher return that you could possibly make. However, you're at the 170 strike price, which is closer to the money than the 180 where it currently is. Does that all make sense? Questions on that? All right, so by doing these higher deltas and closer to in the money, every time you do this, you're always going to show more premiums. The 72 to 167 pays 64 and so on. I don't want to get really close to at the money though. If I do 175, 170, we're getting really close to the money here. That was the wrong one. 175, 170. You could take in $90 off 410. That's really good. But you're really close to that the money. So I'm gonna kind of do a fine balance between it. I'm usually gonna look around 0.16 or so delta. One thing to consider on Thinkorswim, on the very top right here, you're gonna see the expected move. Right now, the expected move is 8.5 or so. So if you take the current price of 180 and then subtract 8.5, the expected move, which is essentially one standard deviation, about 68% or so of the time, is going to get to that strike, is around 171.5. So the 170 is a possibility because 170 is lower than this. I wouldn't want to go to 172 or 175 because we're past the expected move at that point, and it's going to be a riskier trade. Does that all make sense? Questions? All right, so when looking at these, again, in the 5K challenge, I would probably be doing that 170, 165. If I wasn't doing the 5K challenge, or if you want to make it safer, I would go down to the 167, 162.5s. Okay. Now, let me open up the strategy guide for the challenge. Just going to go over this document. It's on the very top of the 5K challenge Discord channel. Some of the parameters. We're going to do one contract of 0 DTE first. If you are doing higher account sizes, or if you want to make them even possibly bigger returns and more risk, you could do more than one contract. This is your money. You do what you want with it. I'm personally going to do one contract because if I'm doing one contract using about $1,000 or so in buying power, I still have 4,000 I could do in the longer dated trades. And I think the longer dated trades are a safer way to go in general because you have a little bit more time on your side. Okay. With the 5K challenge, we're going to start with one longer dated spread. And I'll be at 12:30 Central Standard Time. So be ready for those trades when they come in. You can take the trade if you're free then up to the end of the trading day, ideally. So you'll have a few hours to get into that trade. If you miss it that day, you can still try to get in the next morning. There's a decent shot you'll get pretty close premiums to what I get. It might be higher, it might be lower. That's just how the market works. By doing this, I'm using 1,000 for the 0 DTE, about 500 in the longer dated. I can do up to 8 of these. That'll make $4,000 in buying power used from the longer dated. 4,000 plus 1,000 of the 0 DTE is 5,000. That all make sense? Now again, for the 5K challenge, once we have all 8 positions in play, if none of them closed out, we will wait until one closes. If you have lifetime for all services, I'm still going to be giving alerts. They just won't be posted for the 5K people. And those will be lower delta, safer trades. For the people that are in lifetime for everything, I'll give ideas on other strikes to consider that are safer than the 5K strikes. Questions on that? All right, now as the account grows, let's say I'm at 5,500, I'll add one more contract on the longer dated, easier way to go. So I'll note that in the alerts. I'll say I'm doing 2 contracts instead of 1 on certain positions. I'm going to try to find ones that I think are even more conviction that they'll work out. When it gets to 7,000, then we have 2,000 extra. I think at that point, it makes sense to add a second 0 DTE because we're trying to grow the account to the 10K. If we get to 10K, then we're going to stop the challenge. You can take out the 5K, use that for buy and hold, whatever you want with it. And we'll start again with 5K again. So essentially, you're booking your profits. Any questions on these? And then the rest, just key factors. Not going to really spend a lot of time on it. At this point, I'll leave it open to questions. So pretty much all I wanted to say. As you guys have them, feel free. Write it on the chat, or if you could just say them out. You'll report how many contracts. Yes. So in the 5K challenge, it's going to usually be one contract. When we get a little bit bigger, 5,500, 6,000, certain positions will have 2 contracts. Not all of them, because we need to not use more than the money we have available to us. Floor is open. Feel free to ask questions as you have them. That's why I'm here. Don't be shy. I'm here to help. What do you guys have?
So Lance, so
Yeah.
what are the different strategies do you use in general? Because I can just, you know, brush up before it comes in because I'm pretty new to this.
I mean, the main strategies I'm looking for the longer dated trades are stocks that are in an uptrend. So, you know, EMA, SMA, those moving averages is going to be increasing. The RSI is sloping upward. And then I'm going to be looking for strikes that I could sell a put credit spread that's below a recent support level. So if a stock was moving up, went down here, and then it's moving up again, I'm going to look to sell a strike below where that bounce was. Those are usually going to work out. I see some in the chat here. Texas Yeti, would you go over how the delta is calculated? It's already in the brokerage. You don't really have to worry about it too much. It's a pretty tricky Black-Scholes equation to figure that out. I don't think it's really necessary, to be honest. Randy, the other trades, not zero DTE. We place them in one day or the court. It's gonna be every day, Randy. So every day at 12:30 Central Standard Time, we're gonna do a different longer dated trade. So it's gonna be over the course of quite a few days in the beginning, especially. Like it's gonna take us 8 days to get to the full $5,000 that we're using.
76.
And then at that point, once we have 8, most likely 1 or 2 might be at a good profit to close them out. We're going to look at least 5% or so profit on an individual trade, and then we'll have our buying power back so you can take it into another one. And a microphone. According to market conditions, you'll use various strategies. In general, I mean, that's more for zero DTE. If the market's trending upward, I'm going to look to sell put credit spreads primarily because I think there's a good chance that the market continues up or stays where it is. It's pretty low likelihood it's going to bounce down. If the market in zero DTE is down, I'm going to look to sell the call credit spreads only because if the market's down that day, it usually stays relatively low. Good question so far. Sorry, I'm losing my voice a little bit. On my brokerage, Randy, what brokers do you have? Thinkorswim? Thinkorswim, you need level 2. I'm not sure. It depends on the brokerage. Yeah, you need level 2 access. So if you don't have that currently, you want to put in the application or you could call the help desk, say that you want level 2 access to sell spreads. You don't need level 3. Level 3 are naked calls and whatnot. So you don't need that. Just get level 2 access. Say you're knowledgeable in options, and you are because you're in our group. And then say you're looking for growth in your account. They should be able to prove it. Floor is open as you guys have questions. In individual stocks, trades are always closed before the end of expirations. Very likely we're going to do that because you can make a greater return per day than just waiting it out until expiration. And again, we're trying to make 5K into 10K. That's not the easiest thing to do. If you do an individual trade that takes, 30 days or so to make about 8% on your money, still a good trade if you let it expire worthless. But you might be able to get 5% instead of 8% in maybe a week or two instead of 30 days. So if you look at it that way, you're making more per day than you are just waiting it out. And also you're getting out of the trade at a profit. So you don't have to worry if that position turns against you afterwards. So that's why I personally will look for closing out usually. Almost always will close them out early. But some other members will wait it out and let it expire worthless, and they're still doing well with that too. You save a little in commissions as well. You'll tell us when you close out, yes. So you're going to see exactly when I close out at the price I do, then you can decide to do the same thing if you want, or you can wait it out till expiration if you want as well. Floor is open for questions. I got about 15 more minutes to hang out here.
Thanks, Lance. Have a good one, man.
All right, sounds good, Billy. Have a good one.
You'll have a good Easter. Yep.
All right, you too. Nike, if the trade works against us, you'll always use a hard stop loss on 3x. Or can he be that you roll? I'm not going to be rolling contracts. It is a way that you could go, but the problem with rolling is you're waiting more time to get to that profitable position. I think it's more efficient use of your money just to stop out. For the zero DTE trades, I'm going to do the hard 3x stop out. The zero DTE can move very quickly, and I want to make sure I get out of the position without much larger losses than that. For the longer dated trades, I'm going to use the alert price. Let me quickly go over reasons why on that. So I'm going to be giving both a stop price and a alert price for the longer dated trades. Like this Amazon trade, I wrote stop at 0.9 here, but I personally don't stop on these. I will only set the alert price And the reason why is you can get stopped out on positions even though you're in a good spot. So right now the market's closed. It's a little hard to see this. I'll pick a little bit more volatile stock. And then if you see, that's already pretty high. I don't know, it's on my head. Certain positions will have a pretty big bid-ask spread. So you could maybe see like 20 or 30 here in the difference. When that happens, some people will try to put in orders that are near, dramatic extremes, high or low, and that could make you force out of the trade just because someone put that order in. The position could be perfectly fine, but you might stop out. That's why I personally will do the alert price instead. The alert price might be a 3x stop, it might be less, it might be more. Depends on what's happening with the position and when it gets to that alert price. In general, if it hits the alert price pretty quick in the trade, you want to get out of it because you're already at maybe more of a 3x stop. You still have more time, it could keep dropping. If it hits the alert price pretty late in the trade, it still might be good to go, and we might even still hold it. All right, Eric, when I close out the stock spreads, how I differentiate closing those trades versus closing the spread trades. I'm personally only going to do one of them. There's just too much time on my hand to be doing two different positions. So I'm going to be giving you guys possibilities to make them safer. And then at this point, I think you guys are able to understand when to close them out or stop out. You can also send me a message and then we can look at it personally. How's the alert working? All right, so to place an alert on Thinkorswim, just right click on the price, create alert, and then you're gonna go at or below the price I say. So at or below 170 for those for Amazon. Click create. You can set it up where you get a text message, you get a ding on your brokerage. And then if it goes below 170, I'm gonna see that, and then I'll take action on it. What I mean by 0.9, 10% loss before the stop. So if you took in, say, 0.25, you took in $25. If I close out at 90, I'm subtracting 90 from it, I'll be losing $65. It's close to a 10% loss on that because it's about $65 off 500, a little bit higher than 10%. You want to think about these based on probabilities. So if about 85 to 90% of the trades work out at making, say, 5-6% of your money, but then 10 to 15% of the trades don't work out and you're losing 10-12%, you're still going to be at a net positive in the end. So that's why I don't like rolling. I just like to think of these as individual trades, either it works or it doesn't. All right. Any other last questions? I got about 5 more minutes. My kids are starting to act up a little.
So Lance, quick question. So let's say if I have 100 stocks of Shopify, what's the best way to make money out of the existing stocks?
Yeah, so if you're doing stuff on existing stocks, you could sell covered calls against it. So if you already have 100 shares at a certain price, was it Shopify?
Yeah.
So Shopify's at 77.17. Let's say you bought them all around $77. You could sell a call against it at a higher price than that. It's a safer way to go. I'll share the screen real quick.
So it's a covered call, right? That's the best
yeah,
option.
covered call. Covered call will be a good way to get income on stock you already own. So let's say you bought it at 100 shares at 77. I would go probably about a month out, 28 days or so. And then I would sell maybe an 80 or an 85 or so strike. So if I sell the 80 strike, you're taking in $240 or so, at least, maybe more. So you're taking that in and you're agreeing to sell 100 shares at 80, which is good too, because you bought at 77, sell at 80. You made money on the stock, you made money on the premiums that you're taking in. So for covered calls, the closer you are from the strike price that you sell, the more initial premium you get, but the lower possible capital gains because you're not selling at a higher strike. If you want more possible capital gains from actual stock, sell further away or higher up. So you could even sell around at 85 or so, taking $120 off it, and then you can make $7 per share if it gets called away. It's a fine balance. It's up to your preferences. If you want more current income, sell closer to in the money. If you want more possible capital gains, sell further out of the money, higher.
So just wait until it expires, right? Once I put in, or
You
should I?
could, you could wait until it expires, or let's say it's only worth a few bucks, you could buy it back for a few bucks and then sell a new one. If you want to be a little bit more active on it. If you want to be pretty passive, you can just wait until it expires and then the Monday after to sell another one.
Okay, thanks.
Any other last questions? All right, that should be good then. So feel free to leave me a message on Discord, or you can ask the group chat. And you guys have a good rest of Easter and good holiday season. Thanks for joining. Bye, everybody. No problem, guys. How we going?